Support and resistance are two of the most important concepts in technical analysis for any trader. They represent price levels where a security, like a stock, forex pair, or cryptocurrency, tends to experience a pause or reversal in its trend. Understanding how to trade these levels can give you a powerful tool to enter and exit trades. Here's a beginner-friendly guide to help you get started. Support and resistance are two of the most important concepts in technical analysis for any trader. They represent price levels where a security, like a stock, forex pair, or cryptocurrency, tends to experience a pause or reversal in its trend. Understanding how to trade these levels can give you a powerful tool to enter and exit trades. Here's a beginner-friendly guide to help you get started. 1. What are support and resistance? Support is a price level where a downtrend can be expected to pause or reverse. It's the level where demand is strong enough to overcome selling pressure. Think of it as a floor that prevents the price from going lower. Resistance is the opposite. It's a price level where an uptrend may pause or reverse due to selling pressure overcoming demand. It's like a ceiling that prevents the price from rising further. Support and resistance levels can be identified by observing previous price movements. When a price level is repeatedly tested but not broken, it becomes a key support or resistance level. 2. How to identify support and resistance. Look for recent highs and lows. Look at historical price charts. The most recent high points, peaks, are resistance levels, and the most recent low points, valleys, are support levels. Psychological price levels, round numbers such as 1,200 or $50 often act as psychological support or resistance. Many traders place buy or sell orders around these levels because they seem significant. Horizontal lines. On your chart, you can draw horizontal lines at price levels that have acted as support or resistance in the past. If the price bounces off these levels multiple times, it's a sign they are important. 3. Types of support and resistance. Static, horizontal. These are the most common and easiest to spot. Prices are stuck in a range and horizontal lines are drawn at the support and resistance levels. Dynamic, trend lines. Sometimes support and resistance levels aren't horizontal, but slope with the trend. These are trend lines drawn at an angle and used to identify where prices might reverse during a trend. Moving averages. Traders often use moving averages, like the 50-day or 200-day moving average, as dynamic support or resistance. 4. How to trade support and resistance. Bounce, reversal. Trading. This is the most basic form of trading support and resistance. If the price is approaching a support level, and it shows signs of reversing, like a candlestick pattern or an indicator like RSI being oversold, you might buy. Similarly, if the price is approaching resistance and showing signs of reversal, like overbought conditions, you might sell. Example. If the price is dropping and approaches a strong support level, you could look for a signal of reversal, like a bullish candlestick pattern, and enter a long buy position. Breakout trading. A breakout occurs when the price breaks through a support or resistance level. A break above resistance could signal the start of an uptrend, and a break below support could signal the start of a downtrend. Example. If the price is approaching resistance and breaks above it, you could enter a buy order. Similarly, if the price breaks below support, you could enter a sell order. Retest strategy. Sometimes, after a breakout, the price will retrace, pull back, to the broken level, which now acts as a new support or resistance. This provides an opportunity to enter a trade with a better entry price. 5. Tips for trading support and resistance. Use confirmation. Don't trade blindly at support or resistance levels. Look for additional signals to confirm the trade. This could include candlestick patterns, chart patterns, like double tops, bottoms, or technical indicators, like RSI, MACD. Manage risk. Support and resistance levels are not always perfect. A price might break through support or resistance unexpectedly. Therefore, always use stop-loss orders to protect your capital and control risk. Adjust for time frame. The more times a support or resistance level has been tested, the stronger it may be. Also, higher time frames tend to provide more reliable levels than shorter time frames. For example, a daily chart's support/resistance may be more significant than a 5-minute chart. Practice on demo accounts. Before risking real money, practice identifying and trading support and resistance levels on a demo account. This will help you build confidence and develop a feel for the markets. 6. Common mistakes to avoid. Ignoring trend. Always consider the prevailing trend. Buying near resistance in a strong downtrend or selling near support in an uptrend can be risky. Overtrading. Don't feel like you must trade every support and resistance level. Wait for confirmation signals to make your entries more reliable. Not using stop loss. Even if you're trading at a strong support or resistance level, the price can break through unexpectedly. Protect your trades with stop loss orders. 7. Final thoughts. Mastering support and resistance is essential for any trader. These levels provide structure to the market and help you identify areas where price action is likely to change. While there's no guarantee that prices will always respect these levels, understanding them and incorporating them into your trading strategy can increase your chances of success. Remember, practice and experience are key. Start small, test your strategies, and continue learning as you grow in your trading journey. Thank you for watching FX Pre.Roar.